Today on Life by the Page, we are honored to host one of South Africa's most respected voices in global finance. Deon is the Chief Investment Officer at Credo Group, where he oversees billions in clients' assets across international markets. Over the course of his career, he has also served as the CEO of RMB Assets Management and held senior roles at Sanlam, placing him at the center of capital allocation decisions that shape economies. Beyond titles, what makes this conversation important is in a country where youth unemployment is high and entrepreneurship is often seen as the only path forward, we rarely hear from the people actually allocates capital. Thank you, Deon Gouws, for coming through to the platform.
Langelihle, thank you very much, and that's a very generous introduction. I appreciate that.
You've spent decades allocating capital across global markets. From your perspective, what is the biggest misconception young South Africans have today?
Yeah, there's so much in that question, and I actually don't really want to focus too much on the South African aspect of it today, because I think to the extent that there are misconceptions or maybe misconceptions, I think it's universal. I think the youth, wherever you go in the world, probably have the same lessons to learn. And I'm going to start by saying, I think it's just a question of simple financial literacy. I'm often quite surprised to see that bright people, well-qualified people with good degrees, and even people that are not that young, people that have, that are adults, that are some way down the road in terms of a career. Maybe they're in their 30s, could even be older. Make big money mistakes. And there's many examples of this. The key one, I guess, is that people just incur too much debt and ultimately too much expensive debt. And then they go down a bit of a debt spiral. So if people can avoid debt, don't buy that new car if you can't afford it and if you don't really need it. Buy a second-hand car at a fraction of the price that is as reliable, and rather save your money than pay someone else interest. Sounds like a very simple concept. But there's a lot of, and it's not an option for everybody. Don't get me wrong. If you're starting out and you don't have savings and you need a vehicle, maybe you're going to need to have debt. I get that. What I'm saying is, don't buy the fancy car. Don't incur too much debt, and don't fall down that debt spiral, because someone else is going to, earn perhaps extortionate interest out of you, and you're the one that's going to end up suffering. Maybe for an extended period of time. So just simple financial literacy, understanding when to incur debt, what level of debt's appropriate, and rather arrange your affairs in a way that makes sense in terms of your own life. I think that's the first point. Once again, that's universal. That's not about South Africa. I think the second thing is understanding that a lot of finance and a lot of investing is not about numbers. It's not about maths and stats. It's about psychology. It's about emotions. There's this whole field of interest that's called behavioral psychology or behavioral finance, where people analyze how people respond to financial problems. And you see it in markets, for example. You may have heard that markets are driven by greed and fear. So when the market goes up and up and up, everybody is greedy and they want to participate, and maybe they buy at the wrong time. They buy close to the top, and then eventually they might make a loss because the market goes down again. The opposite is also true. When the market goes down, after the market has crashed, everybody is fearful at the same time. That is why the market crashes, and nobody wants to buy at the bottom. There's bargains out there, but everybody freezes. They don't want to buy. And that's got nothing to do with the numbers. That's got to do with your emotions. And that's true for all of us. We have a relationship with money which is driven by our own background, by our upbringing, by the example of our parents. And that affects our relationship with money. And it's psychological more than rational. And once again, that's a universal principle. And then the final point I'll make is totally differently. Is I think when people think about money, their career, their future, how they're going to make it, how they're going to build wealth, I think the future of work is possibly very different to what it's ever been. Now, maybe that was always the case. If you and I had this conversation around a campfire, 1,000 years ago, of course the future is going to look different. And if we had it 500 years ago with the Industrial Revolution just starting, of course, the future is going to be different. And if you go back 150 years when railroads were being built and before the first plane flew, of course, the future is different. The future is always different. If we could have had it as in my lifetime, we could have had it, 40 years ago before the internet started. The future is going to be very different. So, in a sense, the future is always different. But I think the pace of change and the effect that will have on careers with the power and the speed of AI will probably make it more different for this generation than previous generations. So is that a misconception? Perhaps not. Maybe it's just a perspective on what I think where we are in the history of the world. And all I'm saying is people just have to be open to this change. I think I think traditional schooling, traditional degrees, for example, may be less useful than what they were before from a career point of view. So it's all about being open to gender learning, embracing these technologies, embracing the opportunity that comes from it. This is not all gloom and doom. It's a fantastic opportunity. On the one hand, I wish I was at the beginning of my career so that I can see what I can make of all these amazing powers that AI gives you. On the other hand, maybe it's a relief that I'm an old dog and this is a new trick, and maybe I don't need to worry about it too much. The next generation, will do it for me. I will look at it from the sidelines. So I'm sort of in between those two realities where I am in my life and in my career. But as I say, I think the future of work is going to be quite different to what most of us know today. Sorry, that's a long answer. I hope it qualifies.
Definitely qualifies, man. You've often spoken about global diversification for young investors and entrepreneurs in South Africa. How important is it to think beyond our borders? Is staying local limiting our ambition?
I'm not sure if you're referring to what you do with your money or what you do with your own life. But let's assume maybe both. So from a monetary point of view, if you've got spare cash and you're going to invest it, and you're going to buy a share portfolio, for example, then I think it's very important to diversify globally. And why do I say that? It's not because I don't think South Africa is it's not because I think the stock market there is not good or that the companies there are not going to be, attractive investment opportunities. I think South Africa is a good enough market with lots of great companies and therefore very good opportunities. But having said that, you have to just accept that South Africa is a very small part of the world. Economically speaking, or if you look at it from an investment point of view, I don't know what the exact numbers are, but South Africa is less than 1% of the world GDP, perhaps 0.5%. I think that's the last time I looked at these numbers. I think approximately, that's the level. And by the same token, our stock market is less than 1% of global stock markets as well. So by staying local, you are excluding yourself from 99% of the opportunity set. And there are companies in the global market, in the international market, outside of South Africa, that just offer you opportunities which are not available in South Africa. Whole industries that in South Africa, frankly, don't exist. Or maybe they exist, but they exist at such a small level, not anything that you can really invest in. And there's lots of examples of it. The most obvious one for the last 10 or 20 years is, the big technology companies, the so-called hyperscalers, the Magnificent Seven that we've seen do tremendously well, essentially over my career. The big IT companies, the Amazons and Metas and Alphabets of the world, and you can add to that Tesla and Nvidia, all those. They're all tech companies, essentially in America. And if you stayed locally, you were excluded from all of those. Now, you may not have identified the specific opportunities in hindsight if you tried to go there 20 years ago, but you could have just invested in a global index and you would have had the benefit of these stocks. So yes, I do think it's important to diversify globally. And that's not a anti-South Africa or a Afro-pessimistic view. That is simply looking at it from the outside in terms of the opportunity set. If you mean by your question, what young people need to do in terms of their own lives, in terms of international diversification, I do think it's important, if possible for you, to get some international experience. But perhaps that's not the gist of the questions. We can chat more about that if you want to go down that route.
Yes, I'm asking this because also in the business summit Africa, Magda Wierzyka, she was sitting with Jonathan Oppenheimer. The debates revolved around the difference in terms of investing in the UK because she spent, I think, last year or maybe the past 2 years investing in the UK, and the debated the debated ended up, Magna saying, the UK is necessarily uninvestable compared to SA. So I want to hear your perspective on that aspect because um, I want to hear about the positives that also South Africa has in terms of the emerging markets and for investors, if it's possible to actually thrive in these markets as yet for early investors, if that makes sense.
Yeah, I think there's lots of opportunity in South Africa. I did not hear the interview that you referred to. It sounds like an interesting one. Did I hear you correctly that she said that the UK was uninvestable?
Correct. She said that she definitely said uninvestable. It's uninvestable.
Yeah, it would be interesting to hear why she says that. It just at face value, based on that summary, I don't think I agree with it. But perhaps there's elements that she referred to where we will find some common ground. I mean, the UK has its problems, politically and otherwise, but so I think does every country in the world. I think America's got problems there with the huge sort of rift between the Democrats and the Republicans and some of the personalities involved. So when it comes to politics, I don't think anywhere in the world is perfect. Um, the UK's got other issues as well in terms of maybe with the Labour government and some of the taxes that they want to impose and going backwards on some of the economic policies that are more sort of a free market based. Perhaps she means some of these points. And I say again, perhaps we'll find some common ground if we can chat to each other or if I saw the interview. But bringing it back to South Africa and emerging markets, I do think there's a tremendous opportunity. I mean, South Africa, in my lifetime, and certainly in the new South Africa in the last 30 years or so, democratic South Africa, South Africa has been seen by lots of international companies and international investors as the gateway to Africa. There was a time not long ago where South Africa was by far the largest economy, the most diversified market, the most liquid market. Some of these titles that South Africa used to hold are being challenged by one or two other markets in Africa now. But even if South Africa is not number one anymore, it's still right up there. It's still there or thereabouts in terms of all those points that I mentioned. So it is a gateway to Africa. We're sitting at the bottom of Africa. A lot of companies, international companies, in the past have thought that if we can have a foothold in South Africa, we can then expand into the rest of Africa. It comes with challenges. It's not that easy, but I think South Africa will always have that advantage given the relative level of development that is there and everything else that the country offers in terms of its vast riches of resources, of infrastructure, of people. You can put all these things together and it adds up to being quite a powerful cocktail, which I think sets up South Africa for not the next few years, but the next number of decades. If you fast forward, I forget the detail, but I saw a study from the United Nations years ago where they were projecting what the population of the world will be. At the time, I think they were looking forward to 2050 and maybe even beyond. So it's far in the future. And the bottom line is the biggest population by far in the world, or the biggest population growth, will be in China. Not in China. There's no population growth there because of the one-child policy. It's a big population, but not so much growth. The growth is in Africa, which means the markets, the consumer markets, are in Africa, which means the companies that want to serve that consumer, whether it's feeding them or helping them with healthcare, or educating them, or selling them, all sorts of goods and services, transport, all sorts of stuff, airtime. The opportunity is in Africa. And South Africa is, as I say, well positioned to be the springboard for that. So there's lots of those positives that one can focus on. It also comes with challenges because, with this explosive growth and the inequality that is present, it's not an easy challenge to feed a population that grows quickly and where there's still this inequality. But I think it's like anything in the world, where you've got the greatest opportunity, there's also a challenge. The two go hand in hand. If there's no opportunity without work, without challenge, without overcoming obstacles.
in principles of dealing with the changing world order, an American billionaire called Ray Dalio, argues, I think you also mentioned this in your past interviews. You said that, inflation, while it's painful, it's still often preferable to deflation because deflation can completely stall economic activity. He also describes economies as moving in cycles, like rising, peaking, declining, and eventually resetting. On another chapter, Vusi Tembawai, in an interview with the panel on the panel show, um, he describes South Africa as somewhat of like a big bouncing ball, suggesting that we've experienced pressure, but we may not have fully hit the ground in structural terms, unlike other economies that have gone through deeper resets. We've seen these symptoms from unemployment rates, the grants that have been reimbursed to beneficiaries. Like, I want to get on your perspective. Like, are we closer to an ordinary adjustment phase or a more painful deflationary asset? And how should young South Africans position themselves financially and strategically if you haven't seen yet the full cycle yet play out?
Yeah, there's a lot in that question. I honestly think that South Africa is still essentially at the start of what could be a great future. And I say again, the combination of what you have there in terms of infrastructure, in terms of development, in terms of people and the potential that it brings. Yes, there are challenges. The unemployment that you refer to is perhaps the biggest challenge. And I can't offer solutions in the short term in terms of fixing that. But my suggestion would be, for people out there, is to find an opportunity, especially in this world with all the technological advancements and the power of AI, to build something. And actually, I'm going to use an example, Langelihle, of yourself. I mean, with this podcast that you've built, I got an email from you out of the blue a week or two ago, inviting me to this, and you didn't send me a CV, and I didn't look at your LinkedIn. Maybe you've got a profile on LinkedIn. I haven't looked. But why did I say yes to chat to you? Because you attached a link to your YouTube page, and I clicked on that, and I saw you've done 50 or 60 interviews with some important people, much more important than me. So you've built something. Your CV is there for all to see. It's one click away. You've built it already. And that was good enough for me. I thought if you can build that, then I wouldn't be part of, building the next brick, so to speak, in what you're busy with. And I think it's been an amazing journey. It's nice to chat to you today, and having met you for the first time really this morning online. And that's ultimately what I want to say to you in terms of young people today as well, is find something and build it. There's this old saying, build it and they will come. You don't need a LinkedIn page necessarily. I'm not saying don't be on LinkedIn, but once you've built something, who knows where the building, can develop to.
Last question that has been triggering my mind for a while now. I know you've been interacting with wealth fund managers, business elites in this country, and obviously you operate the company you work at. It's obviously a global firm operating in London and in South Africa. I want to know your perspective of how we can actually now start building, as we're saying, because it's not that we're having this conversation now, but we're actually trying to build something. I want to know your perspective, how we can actually now try and talk to these individuals that have the capital and start investing in young Black South Africans that have the mindsets of trying to start their own tech companies, and how we can actually not, because the political system isn't working, it hasn't been working for the past 20 plus years. But how can we now say, okay, I see this guy, he wants to invest in young tech entrepreneurs, but let's now not go on this route of saying it should go to the government system. The capital should first go to the government system for these certain whatever they're trying to build, because here's the the chairman of the board, etc. But what we're trying to build in this platform is conversation that are leading to how can young South Africans be active in the economy. And if I'm now speaking to you, I want to hear your perspective on how we can actually now start to move forward and take each other accountable.
Yeah, once again, there's a lot in that question. First, I want to start by a caveat and say that it's not only a South African phenomenon, it is, in my experience, it's around the world. The whole world of venture capital, helping young entrepreneurs is a complicated one. So if your idea, if your business concept is good enough, you will find capital, no doubt about that. But the point that I want to make is that the pools of capital that are available for entrepreneurs, people that start out from nothing, they're few and far between. It's a very small piece of the risk spectrum of investors. So most investors, 90% plus, maybe 98% or 99% of investors, don't really have that risk profile, because unfortunately the reality is that for every new business out there, for every new venture capital investment out there, most of them fail. And a lot of people, a lot of investors just don't have the money that they can afford to invest 1%, 2%, 5% of their wealth in something that's likely to fail. That is just objectively, I think, I mean, it's not a scientific answer in terms of the numbers, but I'm just trying to sketch the principle. The world of venture capital is a very specific speciality, and it's actually a relatively small part of the market, on the one hand. On the other hand, if you go and look at some of the big venture capital firms that you'll find in Silicon Valley, etc., I mean, yes, some of these firms are massive. So, Sequoia, for example, Andreessen Horowitz, there's a few other names that you can find if you do a search. Sequoia, as you may not know, was run recently by Roelof Botha. He'd be an interesting guy for your podcast if you can get to him. Unfortunately, I can't help you with him. But a young South African who ran essentially the world's biggest venture capital company. So they have deep pockets. They manage many billions, probably hundreds of billions, trillions maybe, but certainly hundreds of billions. But the problem is, because they're so big, your idea has to be quite big in order for them to be interested. Because if you take something to them which is going to grow from 0 to 100 to 1 million in the next few years, that's not big enough for them. It needs to scale to billions in the next few years, to tens of billions. Otherwise, they probably won't be. So I'm giving you a dichotomy here. I'm saying on the one hand, there's percentage-wise, there's not that much money available for entrepreneurs. And on the other hand, the money that is available, it's the big ideas that will get the money. The small ideas are a little bit more difficult. But my advice maybe to your listener and to a young South African entrepreneur who's got an idea and is looking for funding is to find a mentor, to find somebody in the business world, somebody that's made it already, to walk a road with them. And I think there's a lot of that happening. I don't have examples of this. I do know one or two examples, but it's names that I prefer not to mention, because maybe it's sensitive from the perspective of the so-called angel. I don't know if you know the term angel investing, but find an angel, essentially a mentor, somebody that you can learn from, somebody that can be a role model, but also somebody with a bit of money that they're prepared to put behind you. And people like that generally have a network as well of like-minded people that can back you. So I think it's all in your role models and the mentors that you can find in your community, or reach out to somebody even beyond your community. Take a chance and send an email or try and get an introduction with somebody that you think will be able to help you, or will be able to, will be prepared to fund your idea. It's not easy, don't get me wrong, but if the idea is good enough, it will find capital. That's a universal principle. If the idea is good enough, money will follow. That has always been the case. This is how the world has evolved. This is how economic growth has always been fueled.
Thank you, Deon, for coming through to the platform.
Thank you.